you will get to the moon that much quicker. The metaphor of "to the moon" for investing comes from the exciting influx of young investors that stoked the market in early 2021. In addition to their energetic investment strategies, they dropped a fresh word stack that brought vibrancy to the market patois. Let's light the rocket. Introduction. Newspaper National Hockey League reporter postgame. Derek, how can you check and fight those beasts out there? I mean, you're not that big of a guy. Derek, handing his hockey stick to the reporter. This is the great equalizer. Derek Sanderson, Boston Bruins. This book provides the stock market version of the equalizer, aka EQ. In effect, a strategy map for investors to reach a deeper understanding of markets, implement comparative financial tools, improve their trend forecasting, and create an optimal portfolio. The space trek to improved outcomes begins with a simple question. Is it even possible to consistently achieve superior investment results? Well, the heavily debated efficient market hypothesis proposes that it's impossible to beat the market as stock prices reflect all known information. In other words, investors are not going to find undervalued stocks as current prices have already built in any and all impacting events specific to that stock. A parallel concept, known as the efficient frontier, supposes that there is an optimal portfolio of diversified stocks that can yield the highest return for a given risk class. Both theories use the word efficient in the context of the market. But as an investor, are you efficient? Do you have the curiosity, support network, intelligence, and tools to generate above-average returns? To up our competitive game, many of us search through bookstores, pick at our cohort's experiences, or mine the internet for direction and answers. That's what I did, but there were always remaining questions. Are some financial indicators better than others? How can I leverage share volume into my analyses? Is there a way to de-risk my stock selection choices? What are the attributes that I require to be successful? How does sector rotation affect stock pricing and direction? How do accounting statements interlock for stock selections? Is there a way to literally map out my asset selection choices? What global economic or macro metrics should I be aware of? Can the theories of business modeling act as an overlay for personal investing? As I brainstormed my readings and analyses of asset selection best practices, it became clear that although the information gaps could be sealed, the leap toward choice actualization was across a chasm of risk, uncertainty, and confusion. Essentially, I needed a map that would guide my rocket through the fog of choices and toward superior outcomes. Remember the world before Google? Say you were driving across the state to your college buddy's house. You might get a paper copy of a map, draw your route in red, and be on your way. Still, though, for the last mile, you were pretty much on your own. So you would call and get directions. Okay, so I turn left at the 7-Eleven, drive 4 blocks till I see McDonald's, and then I turn right and go for 2 more blocks, and it's the one on the left side with the orange b-ball hoop above the garage? Yeah, I think I got it. Today, anyone with a smartphone can arrive safely and on time. It's all laid out for you, both verbally and directionally on your screen. Similarly, imagine if you could create an X to Y illustrated asset choice map that ranked your stock targets, crystallized your decision metrics, eliminated blind spots, and enlightened you to the best possible choices. And that's where I come in. My quest to bridge that divide yielded a set of visual canvases that scale up your stock selection acuity, collectively referred to as the equalizer, or EQ. The EQ guides are prompted from 3 talented backdrops. The visual thinking logic of Dan Rome, the back of the napkin. The creative idea generation from Michael Michalko, Thinker Toys. The business modeling canvases from Alex Osterwalder and team, Strategizer book series. As a business executive, I frequently synthesize these 3 brilliant models to de-risk alternatives